Hey everyone, and welcome back to the channel. In the world of finance, few stocks generate as much excitement and controversy as Novo Nordisk, ticker NVO. It's the king of a drug market that is fundamentally changing healthcare. But is this high-flying stock on the verge of a massive breakout, or is there a perfect storm brewing that could lead to a catastrophic crash? Today, we're going to break down the full, complex picture, from the deep fundamentals to the technical signals on the charts, to help you understand what's really going on with NVO. First, let's dive into the core numbers from Novo Nordisk's latest quarterly report for June 25. Looking at the data, I recognize a few key things. The company's total revenues came in at $12.13 billion, showing continued strong growth with a 12.9% increase year over year. However, the operating margin for this quarter was 43.5%. While this is still exceptionally high for a company of this size, it's slightly lower than previous quarters, which could be a sign that the company is facing either higher costs or new pricing pressures in the market. This is a crucial point, because it shows that even the market leader isn't immune to outside forces. So, what does this mean for a potential investment or trade? We need to look at a few key metrics. First is the PE ratio, or price-to-earnings ratio. This is a common way to measure if a stock is overvalued or undervalued. Novo Nordisk's PE ratio is 12.9. Next, let's look at efficiency, and for that we can use a metric like return on equity. This tells us how effectively a company is using shareholder money to generate profit. Novo Nordisk's ROE is an astounding 81.8%, which is exceptionally high and shows just how profitable and efficient its business model is. The market is not without its challenges. Novo Nordisk is facing intense competition from rivals like Eli Lilly, whose drugs Mounjaro and Zepbound are gaining significant market share. These are different kinds of GLP-1 drugs, and some studies suggest they could be even more effective for weight loss. The battle for market dominance between these two giants is fierce. Adding to the pressure are the supply issues and the rise of cheaper, compounded versions of their drugs. These compounded versions are not FDA approved, but they are impacting NVO's sales. The company has filed over 100 lawsuits to combat this, showing just how serious this threat is. For a pharmaceutical company, its patents are its blood life, and for Novo Nordisk, this is a major point of risk and discussion. The intellectual property fortress protecting Ozempic and Wegovy is not a single patent, but a complex bundle of patents. These cover not only the active ingredient, semaglutide, but also its formulation and the delivery device, like the Flex pen. The key compound patents for semaglutide are set to expire in the early 2030s, which is a major long-term headwind. But the real battle is happening right now in the courts. Novo Nordisk is in constant litigation to defend its intellectual property from generic competitors. We've recently seen some setbacks, with courts in both the US and Europe questioning the validity of some of their patents. These rulings introduce significant uncertainty about exactly when generic versions will be allowed to enter the market. So, with this mix of incredible growth and serious long-term risks, where does the stock price go from here? This is where technical analysis comes in. It's a method of using charts and historical data to predict future price movements. In the case of Novo Nordisk, some technical analysts believe the stock is currently in a major bearish cycle. However, this doesn't mean it can't have a huge bounce. This view suggests that we may be seeing a midterm trading opportunity play out. The midterm price target is suggested to be somewhere between $102 and $127. If the stock reaches this level, it's expected to encounter a major resistance zone, which could lead to a massive sell-off. The long-term bearish outlook predicts prices could eventually fall back under $40 after that cycle completes. But a critical point for this theory is the worst-case scenario. If the stock breaks below its current key buy zone now, it would signal a massive bearish momentum that could invalidate the entire midterm bullish outlook. This is a high-risk, high-reward situation that requires a disciplined trading strategy. So, what's the final verdict? Novo Nordisk is not a simple buy-and-hold stock right now. It's a complex puzzle. Its fundamental strength is undeniable, driven by the massive demand for its revolutionary drugs. But that strength is shadowed by major risks: fierce competition, the threat of compounded drugs, and a ticking clock on its patents. The technical picture suggests a fascinating trading opportunity in the short to mid-term, but it comes with a significant long-term risk. Ultimately, this is a stock that demands your attention. It's a story of a market leader fighting to maintain its dominance in a landscape that's changing by the day. Thanks for watching, and remember to always do your own research. Please note that this is not financial advice, and you should consult with a professional before making any investment decisions.